Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
One of the encouraging aspects for those hoping for a V-shaped economic recovery from the novel coronavirus in China has been the increase in the price and demand for many key metals. There is a further aspect that supports the quick rebound thesis: falling Chinese inventories of many metals, from steel rebar to iron ore, copper, aluminium and zinc. It's more than a coincidence that those metals have enjoyed solid price gains in recent weeks. And it's further worth noting that one of the metals where prices have lagged, nickel, also has seen rising inventories in recent weeks. While there are still some doubts over whether China, and the rest of the global economy, will stage a strong rebound from the coronavirus, right now the sliding inventories of many key metals in China are pointing to ongoing resilience in prices.
Moving on to the top news in the energy sector.
India's crude oil imports in May fell 22.6% from a year earlier, its biggest drop since at least 2005, as fuel demand and refinery production was hurt by a country-wide lockdown to curb the spread of coronavirus. Crude oil imports fell to 14.61 million tons, its lowest since 2015, Petroleum Planning and Analysis Cell data showed on Friday. Oil products imports eased 0.8% to 3.57 million tons year-on-year, while exports rose by 5.9% to 5.75 million tons, gaining for a ninth straight month in May as slowing demand at home prompted companies to ship more oil overseas.
Up next is the top agricultural news.
The wheat harvest in Russia, the world's biggest exporter of the cereal, is set to reach 77.5 million tons this year, up 4% on 2019 and the second largest crop on record despite varied results throughout the country, French consultancy Agritel said. The wheat crop estimate was higher than Russia's agriculture ministry's forecast, but lower than ones from consultancies including IKAR, which raised its forecast to 79.5 million tons on Monday from a previously expected 78.5 million.
Next we have agricultural price news.
Chicago soybean futures eased on Monday as the market took a breather after the previous session's climb to the highest since early April on expectations of strong Chinese demand. Wheat lost more ground on the progress of the U.S. winter crop harvest while corn slid after 3 sessions of gains. The most active soybean contract on the Chicago Board of Trade SV1 fell 0.2% to $8.74 minus 3/4 a bushel by 1100 GMT. It rose 0.4% on Friday, with prices touching an April 1st high of $8.80 minus 1/2 a bushel. Wheat WV1 was down 0.6% at $4.82 minus 1/4 a bushel, having hit a September 2019 low of $4.76 a bushel on Friday, and corn CV1 fell 0.5% to $3.30 minus 3/4 a bushel.
Russian wheat export prices fell last week under pressure from the approaching new crop and lower global benchmarks WV1, analysts said on Monday. The world's largest wheat exporter, which competes with the European Union and Ukraine and others on supplies to Africa and the Middle East, is expected to start wheat harvesting in 1 or 2 weeks. Russian wheat with 12.5% protein loaded from Black Sea ports was at $202 a ton free on board, FOB, at the end of last week, down $3 from the previous week, Sovican said.
Moving on to the price moves in the energy sector.
Oil prices fell on Monday as concern grew that a record rise in global coronavirus infections could stall recovery in fuel demand, outweighing tighter supplies from major producers. Brent crude LCOC1 was down 24 cents, or 0.6%, at $41.95 a barrel by 11:41 GMT. The West Texas Intermediate WTI crude contract for August CLC2, which became the day's more active contract, fell 25 cents, or 0.6%, to $39.58.
Now we have metal price news.
Copper steadied on Monday, reinforced by lower inventories and robust consumption in top consumer China, though any further rally is likely to require signs of demand recovery in the rest of the world. Benchmark copper CMCU3 on the London Metal Exchange (LME) traded little changed at $5,846 a ton in official rings. Prices of the metal used widely in power and construction hit 4-1/2-month highs of $5,928 a ton this month.
Now, we will look into the most recent news on the USD Index.
The dollar slipped on Monday in a choppy session as investors tried to navigate their way through an unsettling rise in coronavirus infections and weigh whether it would delay an economic recovery. The Australian dollar led modest gains in Asia as the head of the country's central bank said the impact of the COVID-19 pandemic would not be as bad as first feared. But a record spike in new global cases has capped moves, while moves by Beijing and parts of Australia to reintroduce some restrictions added to the cautious mood. The risk-sensitive Aussie AUD equals D3 reversed early losses and was last up 0.3% at $0.6854. The New Zealand dollar NZD equals D3 rose 0.3% to $0.6422. Against a basket of currencies equals USD, the dollar gave back a bit of last week's gains and fell 0.2% to 97.501. The single currency EUR equals last traded 0.2% firmer at $1.1200 after dipping to a 3-week low of $1.1168 in early trade as divisions among European Union leaders over how to structure a planned COVID-19 recovery fund kept investors wary. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.